Hi, and welcome to Levitt Brothers tutorial on bullish symmetrical triangles. Bullish symmetrical triangles represent neutral periods of doubt and indecision. They're characterized by a series of higher lows and lower highs as the forces of supply and demand are nearly equal. Each rally is seen as a selling opportunity while each dip is met with buying. The pattern is typically large and takes several months to form and should have a nice gentle shape. The trend line should not be too steep or too flat. Symmetrical triangles generally are aesthetically pleasing to the eye. The best breakouts occur 1/2 to 3/4 of the way through the pattern. A stock seems to gain energy as it's compressed into the triangle, but that energy dissipates beyond a 3/4 point. It is recommended that traders abandon the idea of playing the triangle pattern if a stock trades beyond the 3/4 mark, for very little movement is likely to occur. But that doesn't mean the stock isn't still playable. It's just that the triangle is likely to morph into another type of pattern. Volume typically diminishes as the pattern develops because traders become more and more unsure as to the stock's future direction. Bullish symmetrical triangles appear in uptrends and typically resolve themselves in the direction of the trend. Breakouts to the upside should be accompanied by a significant increase in volume to confirm the move. Failure to accomplish this doesn't automatically render the play invalid, but it does raise a yellow flag. Besides volume, the astute trader ought to look for a close above the most recent high. This price represents the previous area of selling pressure and an area where stockholders may be looking to get out even. It is recommended that if volume doesn't accompany a breakout, and if the stock fails to make a higher high within a reasonable amount of time, the trader should move a sell stop up to protect profits or abandon the trade altogether. There are a couple methods used to determine the expected price movement. 1. The widest part of the triangle will dictate the price movement out of the pattern. 2. Price movement will equal the move into the pattern. Some traders will measure to the far side of the pattern as shown here and then project it up from the breakout area, while other traders will use the midpoint as shown here. And 3, price movement is likely to be contained by a trend line drawn through the high of the triangle and parallel to support. The extent of the advance will often depend on the overall market. A strong market will greatly help in achieving a more ambitious price target, but in a weak market, a trader should be happy with a more moderate advance. Let's look at a couple examples. Here's Apple. It was trending up when lower highs and higher lows started to form a symmetrical triangle. The stock broke out on a solid surge in volume and easily took out the highs from within the pattern. The size of the pattern suggested a move up to 18.5, while the move into the pattern put the target up near 20. Here's OIH, the Oil Services ETF. It was consolidating a run-up when a symmetrical triangle formed. Volume was good on the breakout, and in this case the stock pulled back to test the previous resistance area. In an uptrend, this isn't cause for concern. If you're going to swing trade stocks, you have to be willing to give them a little room to move. The size of the pattern nicely forecasted the approximate area the stock would run out of energy. Here's Constellation Energy. Volume wasn't very great on the breakout, but the stock never pulled back into the pattern, and volume picked up the following week. The move into the pattern was too conservative in forecasting the move out, but that's okay. Targets are educated guesses as to where a stock may run out of energy. They aren't set in stone. They're just there to give you a frame of reference to work from. Let's quickly go through a few more. We find it helpful to look at successful pattern formations to train your eye. Autodesk popped off a bottom and then formed a symmetrical triangle before continuing its move up. Alliant Tech Systems rallied nicely from the mid-50s well into the 60s before consolidating in a symmetrical triangle pattern. It then broke out on solid volume. Oceaneering traded into a symmetrical triangle while in an uptrend and then busted out on strong volume to begin the next leg up. Quigley, textbook continuation move. Robert Half, nice breakout with a delayed volume surge. This is an example of where a trend line drawn parallel to support contains the upside price movement. Sonic Solutions, solid volume surge to break the stock out from a small symmetrical triangle and begin the next leg up. WMS, this pattern was large, so we show it here on a weekly chart. It was a textbook play. That wraps up this tutorial. Again, bullish symmetrical triangles are pauses within uptrends and should see a significant increase in volume upon breaking out. The extent of the advance will often depend on the overall market. A strong market will greatly help in achieving a more ambitious price target, but in a weak market, a trader should be happy with a more moderate advance.